This is India's #1 news network, and you're watching News 9. English news as it should be.
A very good morning. Thank you so much for tuning in to News 9. I'm Karthik Malhotra. Well, a lot packed in for this show this morning. First up, we'll bring you Indigo, after weeks of chaos with respect to flight delays and cancellations, has now rolled out special allowances and pay hikes for its pilots, both the captain and the first officer. That's a big story we're tracking for you on the show this morning. In our global segment, we'll tell you how Moscow has alleged that Ukrainian drones have attacked one of Putin's residences. Of course, Kyiv has denied the report, but we'll tell you what US President Donald Trump had to say about this incident. And of course, in our special market coverage, we'll tell you the playbook for 2026. Two special guests will be joining us, Nilesh Shah and Devina Mehra, on the show this morning. You're watching Morning Brief at 9. This is Morning Brief at 9. First up, let's bring you all the headlines we're tracking for you on this hour. Russia claims Ukraine launched dozens of drones at one of President Vladimir Putin's residences, an allegation Kyiv dismisses as a lie aimed at sabotaging US-led efforts to end the war. India's industrial output jumps 6.7% in November, the fastest pace in over 2 years, signaling improving momentum in manufacturing and core sectors. Mukesh Ambani's Reliance Industries rejects media reports alleging a $30 billion government compensation for gas production shortfalls from its KG-D6 block, calling the claims irresponsible and factually incorrect. Indigo revises cockpit crew allowances effective 1st of Jan 2026, boosting pay for layovers and night duties as it seeks to stabilize operations after cancelling nearly 4,500 flights earlier this month. Precious metals, gold and silver extend losses on Tuesday on profit-taking after hitting recent records, while Asian equities fluctuate in quiet trade as investors wound down ahead of the New Year break. Japan's SoftBank acquires Digital Bridge in a $4 billion deal, accelerating CEO Masayoshi Son's push to build a global artificial intelligence infrastructure empire. Chinese Foreign Minister Wang Yi says Beijing will forcefully counter large-scale US weapons sales to Taiwan, escalating tensions over the self-ruled island China claims as its own. US banking giant Citigroup says it is selling its remaining Russian operations, expecting a $1.1 billion hit as it winds down exposure to the country, subject to regulatory approval. And global superstar Beyoncé joins the billionaire club after earning $148 million in 2025, becoming only the 5th musician in history to cross the $1 billion mark. Top story this morning: Russia on Monday accused Ukraine of attempting to target the residence of President Vladimir Putin in northern Russia. Moscow, however, offered no evidence to support the claim. Meanwhile, Ukraine rejected all the allegations, calling them baseless and accusing Russia of trying to derail the ongoing peace negotiations. Take a look.
Russian Foreign Minister Sergei Lavrov said on Monday that Ukraine had tried to attack President Vladimir Putin's residence in northern Russia, an accusation Ukraine said is a lie. Without presenting any evidence, Lavrov said Ukraine attacked the presidential residence in the Novgorod region with 91 long-range drones, which he said were all destroyed by Russian air defenses. Lavrov said no one was injured and there was no damage. He said that targets had already been selected for retaliatory strikes by Russia's armed forces. Ukrainian President Volodymyr Zelensky denied that his country had planned such an attack. Zelensky said that Moscow was preparing the ground to strike government buildings in Kyiv and that the claim was an attempt to undermine peace talks. The angry exchanges, including a statement by Russia that it was reviewing its stance in negotiations in response to the attack, dealt a new blow to prospects for peace in Ukraine. Russia's accusation comes a day after U.S. President Donald Trump met Zelensky in Florida.
Well, thank you very much. We had a terrific meeting.
Trump said they were closer to an agreement to end the war, although territorial issues remained.
That's a very tough issue, but one that I think will get resolved. Yep.
Zelensky said on Monday 2 main issues in a 20-point peace proposal remained to be resolved. Control of Ukraine's Zaporizhzhia nuclear power station, which is in Russian hands, and the fate of the Donbas area. Russian forces are battling to take Donbas, a region internationally recognized as Ukraine's sovereign territory. Kyiv wants fighting halted along current front lines.
And Ukrainian Foreign Minister Ril-Bp said on social media that Russia's claim of an attack on President Vladimir Putin's residence was a fabrication aimed at creating a pretext for further Russian strikes on Ukraine and at undermining the peace process. Meanwhile, US President Donald Trump said on Monday that he had just heard about Moscow's accusation that Ukraine tried to target Putin's residence in northern Russia and was very angry about it.
I don't like it. I heard about it this morning. You know who told me about it? President Putin told me about it. Early in the morning, he said he was attacked. That's no good. That's no good. Don't forget, you know, the Tomahawks. I stopped the Tomahawks. I didn't want that. Because we're talking about, you know, it's a delicate period of time. This is not the right time. It's one thing to be offensive, because they're offensive. It's another thing to attack his house. It's not the right time to do any of that, and can't do it. And I learned about it from President Putin today. I was very angry about it.
Donald Trump there standing in Florida next to Benjamin Netanyahu. Meanwhile, US President Donald Trump on Monday warned that the United States would move swiftly to launch fresh strikes on Iran if it is found to be rebuilding its nuclear program following US attacks carried out in June this year. Now, Trump made the remarks while speaking to reporters at his Mar-a-Lago estate in Florida, where he welcomed Israeli Prime Minister Benjamin Netanyahu on Monday. At the same time, Trump said he remained open to negotiations, signaling willingness for a much smarter deal with Tehran.
Now I hear that Iran is trying to build up again, and if they are, we're going to have to knock them down. We'll knock them down. We'll knock the hell out of them, but hopefully that's not happening. I heard Iran wants to make a deal. If they want to make a deal, that's much smarter. You know, they could have made a deal the last time before we went through, you know, a big attack on them, and they decided not to make the deal. They wish they made that deal. So I think, again, they should make a deal. They want to make a deal, but sometimes that doesn't happen. Yeah, please.
And from 2 conflict zones to now potentially a third one playing out right here in Asia, US President Donald Trump on Monday played down China's latest military activity around Taiwan, describing it as part of Beijing's long-running drills in the region. Remember, China earlier announced the start of fresh maneuvers, including live-fire exercises in a show of force that followed the US decision to approve one of its largest ever arms packages for the self-ruled island governed from Taipei. Now, when asked about the Chinese action, Trump avoided criticism and instead highlighted his personal rapport with Chinese President Xi Jinping, characterizing the latest drills as routine military activity.
China. So China has been doing naval exercises basically to test encircling Taiwan. Can you explain to us what your knowledge is of that? What do you think about that? Have you had any discussions with China?
Well, I have a great
that?
relationship with President Xi, and he hasn't told me anything about it. I certainly have seen it, but he hasn't told me anything about it, and I don't believe he's going to be doing it.
Does it worry you?
No, nothing worries me. Nothing.
All right, let's move to stories from India now. First up, an eye on the macroeconomy. Well, India's industrial production growth, as measured by the Index of Industrial Production, or IIP, surged to a 25-month high of 6.7% in the month of November this year on an annual basis. The IIP staged a solid comeback, edging higher from an upwardly revised rate of 0.5% in October. The IIP growth had previously hit a high of 11.9% in November of 2023. According to the data released by the Ministry of Statistics and Program Implementation, the surge in the industrial output was driven by an 8% growth in the manufacturing sector. Among the other major components of IIP, growth in mining activity stood at 5.4%, aided by the end of the monsoon season and stronger output of metallic minerals, including iron ore. However, electricity stayed in contraction, but the decline narrowed to 1.5% from 6.9% in the month of October. And on to corporate news now. Reliance Industries on Monday rejected media reports claiming that the government had raised a $30 billion demand against the company and its partner BP over alleged underproduction at the KG-D6 gas field, calling the reports irresponsible and factually incorrect. In a statement, the company said there was no claim of $30 billion against Reliance or BP and clarified that the government's demand related to the KG-D6 block stood at $247 million, a figure that has already been disclosed in its audited financial statements. Reliance further stated that it, along with BP, had at all times complied with contractual and legal obligations and strongly objected to what it described as a mischaracterization of facts. The clarification comes after reports claimed that the government had sought over $30 billion from Reliance and BP, alleging that the partners had built excess infrastructure at the Krishna Godavari D6 block and failed to meet gas production targets. According to sources cited in those reports, the claim was made during arbitration proceedings that concluded on November 7th and pertained to compensation for underproduced gas and allegedly excessive spending on installations, fuel marketing and interest. The arbitration award is expected only next year, with the losing party likely to challenge it in the Supreme Court. Now, the long-running dispute dates back over a decade. Between 2012 and 2016, the government disallowed $3.02 billion in costs incurred by the consortium and sought $247 million in additional profit petroleum. Reliance contested the move, arguing that the production sharing contract does not permit a retrospective disallowance of costs. The arbitration process itself faced multiple delays, including legal challenges over the appointment of arbitrators. Now, in 2023, the Supreme Court cleared the way for proceedings to continue. Now, Indigo has revised the cockpit crew allowances effective 1st of Jan 2026 for its captains and first officers, as per a statement issued by the airline on Monday. Now, this move comes in the wake of severe flight disruptions that plagued the airline earlier this month, leaving thousands and thousands of passengers struggling across the country. The central government then had to relax night duty rules for pilots due to widespread disruptions and to give Indigo more time to stabilize its operations. Now, Indigo in its statement said that if a domestic layover's duration is between 10 hours 1 minute and 24 hours, the captain, who was previously entitled to receive 2,000 rupees, will now receive 50% more, that's 3,000 rupees. Meanwhile, the first officer, who was earlier entitled to 1,000 rupees, will now receive 1,500 rupees. For every hour beyond those 24 hours, the captain will be entitled up to 150 rupees, up from the earlier 100 rupees, while the first officer will be receiving a 75 rupee jump from the earlier 50 rupees. Now, similarly, the deadhead night allowance, tail swap allowance and transit allowance have also been increased. We'll tell you about those. The technical term deadhead means pilots flying in uniform as passengers traveling from one airport to another to fly an aircraft from the next destination. Now, the deadhead allowance during the duration of the flight in which pilots are flying as passengers, the captain and the first officer were earlier entitled to 3,000 rupees and 1,500 rupees respectively per scheduled block hour. The allowance have now been increased to 4,000 rupees for the captain and 2,000 rupees for the first officer. Similarly, for night allowance, earlier both the captain and the first officer were entitled to allowances on a multiplier of 1.5 times. Now, the captain will be paid an allowance of 2,000 rupees per night hour, while the first officer will be entitled to an allowance of 1,000 rupees per night hour. Similarly, there's the new concept of tail swap, which has been added to the allowance package. Now, tail swap is when one aircraft on a scheduled sector has been replaced with another plane, requiring the pilots to redo the pre-flight checks. Earlier, there was no provision for this tail swap allowance, but now captains and first officers will be entitled to 1,500 rupees and 750 rupees per tail swap, but with some riders. Overall, what this means is that pilots will get paid more for night flying, layovers, as well as every time they get ferried to another destination to take off a plane, or in case a scheduled flight is changed with another. And before we slip into a break, another quick story from the world around us. And this one comes from the pop music scene. That's right. Global pop icon Beyonce has officially joined the billionaire club. Forbes said on Monday that the 44-year-old entertainer is now a billionaire, becoming just the 5th musician in the world to reach that milestone. Now, Beyonce joins an elite list that includes her husband Jay-Z, along with Taylor Swift, Bruce Springsteen and Rihanna. The milestone follows several blockbuster years. Her Renaissance World Tour in 2023 grossed close to $600 million, followed by a major reinvention in 2024 with her Grammy-winning country album, Cowboy Carter. Now, the momentum carried into 2025 when Beyonce headlined the world's highest-grossing tour of the year. Forbes estimates Beyonce's earnings at $148 million in 2025 before taxes, making her the 3rd richest paid musician globally. While she has expanded into businesses ranging from hair care to fashion and spirits, the bulk of her wealth comes from music driven by global tours, ownership of her back catalogue and full control of her creative rights, though her company, Parkwood Entertainment. And with that, we will slip into a very short break. A lot more coming up on the other side. Stay tuned to News 9.
पढ़ता है, खेलता है, झूलता उछलता है, दौड़ता कभी कभी दौड़ कराता है, आगे आगे बढ़ता है इंडिया, अमूल दूध पीता है इंडिया।
2026, take notes. Manifesting. For my little Miss Sunshine, tickles and giggles. Also wanna be a biker chick this time. And dear 2026, only love for my people and myself. To manifest my best life, nature's cosmic energy. Now mine, natural diamond intention pendants.
Welcome back. You're watching Morning Brief at 9 right here on News 9. US President Donald Trump on Monday renewed his threat to sue Jerome Powell, accusing the Federal Reserve chair of gross incompetence over the handling of the renovation work at the central bank's headquarters in Washington. Now, speaking to reporters in Florida, Trump also said he plans to announce his choice for the next chair of the Federal Reserve sometime in January. Let's listen in to the US President.
We're thinking about bringing a suit against Powell for incompetence because think of it, these aren't outstanding buildings. These are small buildings. He's at $4 billion more. It's going to end up costing more than $4 billion. $4 billion. It's the highest price of construction. Again, Democrats, highest price of construction per square foot in the history of the world. There's never been. Gorgeous monuments are built for a much smaller price. So we're thinking about bringing a gross incompetence, what's called gross incompetence lawsuit. It's gross incompetence against Powell.
All right, with that, let's move on to a quick check on the markets. We'll come to India very shortly, but first up, let's quickly look at Wall Street, where the Nasdaq overnight lost as much as 0.5 percentage point. Here's more on all the updates from Wall Street.
U.S. stocks ended lower on Monday, with the Dow dropping 0.5%, the S&P 500 shedding more than 0.33%, and the tech-heavy Nasdaq losing 0.5%. Many heavyweight tech stocks retreated from last week's gains that had pushed the S&P 500 to record highs. Melissa Brown is Managing Director of Investment Decision Research at SimCorp.
We've had a mini rally or maybe re-rally in some of the Magnificent Seven stocks over the last few days. And I think it's just, profit taking. You always see a volume dip at, this time of year. And I think, so when you get that kind of strength or even weakness on lower volume, it's not particularly surprising to see that any given trade maybe has a bigger impact on the stock when volume is lower as compared to when volume is higher.
AI heavyweights NVIDIA and Palantir both closed lower on Monday. Shares of Tesla dropped more than 3% after hitting a record high last week. Among other movers, bank stocks retreated after a strong rally this year, with Citigroup, JP Morgan Chase, and Bank of America all ending lower. On the flip side, energy stocks gained, tracking a 2% rise in oil prices, with Expand Energy and Coterra Energy edging higher.
All right, and from Wall Street, let's move to Dalal Street and a quick check on the Indian markets, which opened just a few minutes ago. And the selling pressure continues on Dalal Street as well as Sensex and Nifty. Both continue to slide. Remember, yesterday was the fourth consecutive trading session where the market slipped in the red territory. And this morning, again, the markets are not looking that pretty. If you look at the figures on the screen right now, Nifty 50 is below that 26,000 level, while Sensex is now well below the 85,000 psychological level. Meanwhile, even the mid-cap and the small-cap space reeling under some pressure, a little heightened volatility as well, with the India wicks now inching closer to the figure of 10. Meanwhile, let's pull up the Nifty 50 heat map, and it seems that most sectors continue to be in the red this morning, barring, of course, just the communication space coming from Bharti Airtel, and Bharti is among the only big companies on the Nifty 50 this morning, which is in the green territory. Let's look at the stocks on the table right now, and you've got selling pressure continuing on the BFSI space as well as the IT sector. Remember, the IT sector was one of the biggest losers in trade yesterday. Meanwhile, Reliance Industries is absolutely flat this morning. And Reliance Industries, after clarifying and denying those news reports about that $30 billion government demand, calling those factually incorrect, trading absolutely flat, no positive momentum after the selling that we saw on the Reliance stock yesterday. Meanwhile, in other sectors, remember, Indigo had announced its pay hike for pilots and first officers this morning. Investors not taking too kindly to that excess cash out for Indigo, especially after the flight cancellations and delays earlier this month. And you're seeing the Indigo stock, which was recently added into the Nifty 50 pack, this morning trading about 0.5 percentage point down or so. So that's what we have on the charts this morning. Remember, just the first few minutes of trading, and markets could move in either direction as trading continues through the day. Remember, the FII sellout story continues to be one of the big headlines that we track right here on News 9. With that, we will slip into another very short break, but coming up on the other side, we'll have two very special market guests joining us this morning. We'll have Nilesh Shah and Devina Mehra, who would be here with us after the short break to help you understand and decode what your stock market playbook should be for 2026. Don't go anywhere. We have these two market veterans joining us after the short break.
क्वालिटी पे इतना कॉन्फिडेंस, इसलिए बिरला ओपस एश्योरेंस। एक साल में पेंट को कुछ भी हुआ तो पेंटिंग वापस करके देंगे। रजिस्टर करो birlaopus.com पर।
पढ़ता है, खेलता है, झूलता उछलता है, दौड़ता कभी कभी दौड़ कराता है, आगे आगे बढ़ता है इंडिया, अमूल दूध पीता है इंडिया।
You're watching News 9. This is our special coverage for what action should you expect from the stock markets in 2026. Remember, 2025 has been a year of FII exodus. It's also been a year where that all-elusive India-US trade deal did not really materialize. And it's been a year that we've seen commodity prices go through the roof, silver and gold surging like never seen before. So what should be your market playbook for 2026? We have two very special guests joining us today to help us and help you deconstruct your portfolio, help you understand everything that's happening in the world, and arrive at a strategy as you enter 2026 and stock markets in 2026. No surprises there. We've got Devina Mehra, founder, chairperson and managing director, First Global, joining us on the show. We've also got Nilesh Shah, the managing director of Kotak Mahindra AMC, on the show. Devina and Nilesh, thank you so much, and what a pleasure it is to have you here with us on this very special occasion as we enter 2026 and multiple doubts linger around what to do and what to expect as far as the stock markets go. So let's first begin with the both of you, and let me once again thank you both for your time this morning. Now, we thought, let's not do a regular market show. Let's actually try and add a little bit of entertainment to it. I don't know how big buffs of Bollywood you are. I know Mr. Nilesh Shah is a big cricket buff, but we thought let's bring in a little bit of Bollywood twist to our conversation this morning. So, Devna, first off, straight off the bat, all retail investors looking at their portfolios not growing at the same clip that they became accustomed to before 2025 have just one hope. And that hope is, mere FIIs aayenge. My question is, mere FIIs kab aayenge?
Question ही गलत है. So I mean, मैं तो यही बोलूँगी. So if we have to look at FIIs, if you look at just plot FIIs, net buys and net sells versus the market, and you will see there is no correlation between the two. So I mean, the sort of intent behind the question is that when the FIIs come back, then the market will go up, or if they exit, then the market goes down. That is simply not the case. So that, as I said, that's the wrong question. I mean, the direction of the market, if you want to know, the cause is not FIIs going in and out. So that's and this I'm talking the long-term history. And if you really want something from history, I will tell you, FIIs started investing in the markets around 1994. And before that, foreign investors could not invest in India. So you would have said that this massive liquidity is coming from a source which didn't even exist earlier. So the market will go through the roof. But what happened from 94 to 2003 is the only 9-year period in the market history when the net returns were zero. Sensex returns were zero for that period. I mean, it went up and it went down. So I mean, there's no correlation, let alone causation. So that's not the right question to ask, I would say that.
Not the right question to ask. Do you agree, Mr. Nilesh Shah? Because the exodus of FIIs seems to have been a worry for the last 6 months and counting, now at 1.6 lakh crore rupees of exits. DIIs have been doing the heavy lifting to pretty much keep the markets afloat. So do you agree with Devina that FII exodus is not really a big concern as far as liquidity in the Indian market goes?
So FIIs will exit only when there is liquidity. Otherwise, how will they exit?
Right.
And for the market, what matters is earnings, not who is buying and who is selling. As Devina mentioned, when they were buying for 10 years, market delivered no return.
Right.
Today, despite their selling, market is up moderately by about 6% last year and about almost 16% since March 20. So what matters for market is growth, governance, rather than who is buying and who is selling.
Right. So who is buying and who is selling? Well, it definitely seems that it is the retail investors who are buying, and they are buying hopefully in the hope and through DIIs in the hope that markets right now are at better valuation levels than they have been in the past. So there were conversations around the market valuation and overall some froth in the markets, till about a year back. Do you think with this correction that we've seen, at least in the indices, that sort of fear of froth and overhyped valuations has been arrested to some extent?
I see, first of all, index level valuation, especially since most people look at PE, is not really worth looking at simply because the composition of the index has changed so much over the years. So if I go back, a little over 2 decades, there were no banks or financials in the main indices. Now they are the highest weight. At one time, these indices were full of public sector PSUs. And then there came a time when people forgot that they were PSUs. But if you plot the sectoral PEs, they are actually not at extremes, and they have not been at extremes. So as far as the mainstream stocks are concerned, last year also 2024, most of the kind of froth was more in the small cap, micro cap rather than in the large cap. So the large cap valuation for almost all industries were not at extreme ends. They're still not at extreme ends. And I do see an uptick in earnings coming up. So that is the other thing. The other thing which I would like to remind viewers is that sentiment is a contraindicator. Of late, I have seen most TV anchors or in other media, everyone is enumerating the risks. So that focus is more on risks, and that shows. And people are asking that should I stop my SIP? Should I get out of the market?
Right.
So when those questions come, those anxieties come, and this is hard data. This is research studies done all over the world, not just India, US, but Portugal, Brazil, wherever the study is done. Is that when people are asking these questions, the next period returns are above normal. When it appears that great returns are there for the taking, as was the case in the first 8 to 10 months of 2024, when everybody thought 30% compounding to kahin nahi gaya, so that is when the returns are below normal. So if you see the last samvat, you hardly got any returns.
That's right.
And even now, when the indexes that do show some increase for this year, if you look at the median stock in, let us say, the NSE 500 or BSE 500, they are still down. There's still a considerable portion of the stocks which are down more than 20%, more than 30%, which is why even though the indexes have done reasonably, you can say, the portfolios are still showing a lot of red. So I'm sure a lot of your viewers will not see the index returns on their portfolios.
Right. So index returns on portfolios not coming through, but the SIP strategy must continue if that is what you're saying, Devina. I hear you loud and clear that these are times perhaps to continue with accumulation even if valuations are low. But coming to the overall market...
Of your equity valuation, allocation, I must add that.
Increase
Never
your
have
allocation.
100% of equity, but
Right.
whatever is your equity allocation, it makes sense to be invested.
Right. But Nilesh, we can't really take the sentiment away from either the commentary or the action that one sees on the stock markets. And I think one sort of lingering sentiment has been this, this ever elusive India-US trade deal, which is not just keeping FIIs on the back burner. They are also pretty much keeping exporters on the edge, and overall India's own macroeconomics to some extent depend on that trade deal with the US to come through. But we seem to have missed the December deadline. Are you hopeful that by March at least we will have the trade deal with the United States? Because in true Sunny Deol style, if we can bring up that meme now, in true Sunny Deol style, it seems like this is Tariq pe Tariq pe Tariq, but no real trade deal.
So in the Bollywood style, ट्रंप को समझना मुश्किल ही नहीं, नामुमकिन भी है. So let's leave it at that. US has levied absolutely unreasonable tariff on India.
Okay.
Even though we are not the largest buyer of Russian energy, and even though we respect US sanction on countries like Iran and Myanmar, which China sidesteps. Now, whether tariff deal will happen or not, it's difficult to estimate. But because of probably those US tariff deal impacting our exports, the government has unleashed reforms.
Yes.
The GST cut put money in the pockets of consumers. There is significant focus on infrastructure investment, ease of doing business. And even yesterday's the Chief Secretary's meeting with Prime Minister focus was on the economy. The second quarter GDP came at 8% plus, way ahead of everyone's expectation.
Yeah.
With or without US tariff deal, India will be fastest growing major economy. If US tariff deal happens, sone pe suhaga. But if it doesn't happen, then we have to leverage our domestic economy and continue to grow.
So you were talking about India's fundamentals and the growth numbers. So let's bring up on that account the next sort of Bollywood meme for stock markets that we have. Devna, do you expect up ki bar 8% par? At least H1 tells us that we are clocking a run rate of 8%. Do you think that momentum can continue given the fact that we are now looking at hopefully better Q3 earnings results also after the GST cuts, which should have led to better consumption? Can we expect hopefully clocking and continuing with this 8% run rate and say up ki bar 8% par for FY26?
See, I mean, even now, if you look at the GDP, a lot of the heavy lifting is being done by government expenditure. Yes, private consumption is now going up. The low for private consumption was in 23-24, so it's been going up since then. When people discovered it only when the market started going down that there was a problem with consumption, but actually the low was at 23-24. So consumption is going up, which is why I said, that's part of the reason why you will see corporate earnings going up. So, and part of why consumption is going up is that the inflation is low. So to some extent, I would say that the real GDP number is little bit overstated. And if you look at corporate earnings, they are really tied to nominal GDP, which not real GDP. Because and you actually calculate the nominal GDP and then use the inflation as a deflator. Right. So nominal GDP numbers have been actually quite low. And part of it, of course, as I said, is not just that the inflation has come down, but in certain products, the prices themselves have come down, which almost never happens, which looks like a very good thing, except that when you remember that nearly 50% of India's population is dependent on agriculture, 46% I think is the number. Yeah. And when food prices go down, their incomes go down. So it is good for the urban consumer, not so good for the rural consumer when the low inflation is driven by food prices. So that's the other side of the equation. But even so, I had expected earnings to have an uptick in the second quarter, but that got delayed as soon as the GST changes were announced because, that obviously disrupted the market in the short term, even though it's good for the long term. So then as soon as that was announced, my kind of expectation shifted that the real uptick you will see Q3 onwards. So that on the corporate earnings, yes, I mean, I still see good things. But part of that 8% number is an inflation anomaly. And I hope the other parts of the economy really go up and we are able to maintain that because we need to maintain that if we want the Viksit Bharat by 2047. We need to have 8% plus growth on a consistent basis.
8% growth on a consistent basis. So obviously it would be the GDP figure that one would want to keep an eye on, Mr. Nilesh Shah. But if one could sort of break down the first quarter of the calendar year 2026, we have hopefully three headline events. One is going to be the corporate earnings, which will start getting announced early mid-Jan onwards. Then you'll have the budget. And already we've seen the kind of exceptions that have been given on income tax, up to 12 lakh rupees of exemption, followed by the GST reforms that we've seen. Does the finance minister have any headroom now to give even more cash in the hands of citizens? Because that is the second headline event. And the third one, of course, is the trade deal. Whether or not, if and when it happens, that, of course, continues to be a question. But apart from these three, which is corporate earnings for Q3, the budget, as well as potentially the trade deal, are there other variables that one should keep in mind? Barring, of course, the inflation print, which Devina has already spoken about. Mr. Shah. Okay, I think we seem to have lost Mr. Nilesh Shah's connection right now. We will bring him back with us. But what we are trying to arrive at is that there are going to be some critical moments in 2026 which could define potentially the trajectory of the markets. One, of course, being the fact that that Q3 earnings are going to be announced, followed by the budget speech, and then, of course, the India-US trade deal. Hopefully by March, at least, that is the indication which is coming through. So if Devina Mehra, in case these were to come through, these three were to come through, can we expect a bull run in the Indian markets? And then again, going back to our Bollywood meme flavor of the day, can we sort of expect that, that the bulls right now, which are caged, are pretty much the Ranveer Singh of Dhurandhar, who are saying that घायल हूं इसीलिए घातक हूं. Once these three tick marks come through for the Indian retail investors, then there is no stopping the bulls?
Actually, I mean, you don't even really, I mean, for bull markets, we look for triggers in hindsight, and exactly the same things can be used to explain either a market rise or a market fall. And risk is always something you didn't see coming. But as I said, earnings, I do expect an uptake, which means that the Ps will start to look even more reasonable. On the budget, I don't know how much room there is for good news, because even last budget, I don't know how many people picked up on this, but if you looked at the personal tax estimates last budget, personal income tax was cut, but you'd be surprised that the collections on personal income tax were budgeted to grow by 14%. Whereas GST and corporate tax were supposed to grow by 10.5% in line with the nominal GDP estimate. Right now, we are not even at that nominal GDP. That's another matter. But I'm saying, why was the personal income tax supposed to grow when you were by more than all other taxes when you were cutting into personal income tax rate? And as I said at that time itself, that there might be regulators trying to curb excess speculation in capital markets, but the government budget is really banking on it, because obviously the higher taxes were supposed to come from the capital market related taxes. And maybe, I mean, I have not looked at the recent data, but sometime back I had seen that that all that day trading, etc., the volumes are falling. So maybe, I mean, this year also, I'm not sure whether the personal income tax targets would be met as per the budget in beginning of the year. So that's that's one question mark. So I don't know whether there's any room for any good news from the budget. And the budget, I would like to really concentrate on on employment, education, health. That's the not capital market is never my ask for from the budget.
Absolutely. But of course, I mean, for job creation, potentially some additional schemes beyond the PLI for the manufacturing sector and for, as they call, the animal spirits of corporate sector to be unleashed. But let's say we are, Mr. Nilisha, in case we are to sort of, check the boxes on these three accounts, solid Q3 growth, hopefully with the GST boost, potentially some good news coming by way of the union budget, and then, of course, the India-US trade deal, hopefully by March. Can we safely expect Nifty 50 to touch the 30,000 level in 2026?
So it's always difficult to predict market in the short term. But continuing your Bollywood theme, I will say market will be still kahani kismat ki. Last year, we did see divergence between large, mid and small cap performance and valuation. And in 2026, while those range will narrow down, it will still be a year of stock selection and sector selection. There will not be a very broad-based rally. There will be moderate return, and you'll have to pick your stocks and sector carefully. So I will say 2026 is not Dhurandhar year, it's Kahani Kismat ki.
Kahani Kismat ki. It's not going to be a Dhurandhar year, it's going to be Kahani Kismat ki. We will come to your specific, sectoral and potentially any other news-based or event-based sectors that you would want to highlight. But before that, Devina, commodities have been on a wild run. Silver and gold prices have gone through the roof. So investors who have missed out on this gold and silver rally would be pretty much like Deepika Padukone style saying, "Ek chutki gold ki कीमत tum kya jano." Is this gold going to become all the more expensive in 2026? We know that silver demand, likely with the curbs that China is likely to introduce from the 1st of Jan, could sort of, continue with the silver story, touching some experts saying as high as 2,75,000 rupees or so a kg. But is this gold story also going to continue into 2026?
I would like to tell your viewers that the worst reason to invest in anything is the FOMO feeling. So, because that always derails you. And this is statistical again. If you chase the sector or the asset class that has done well of late, systematically you will underperform. In our multi-asset products, whether it is global or India, we always have allocation to precious metals, but it's more like a single-digit allocation. So it should not be that 30% or 40% of your money is in things like this. Silver, of course, has an industrial story also. Gold, let me also remind your viewers that in dollar terms has been a more volatile asset than equities.
Right.
And I had some time back seen that there was a headline saying gold has not seen a rally like this since 1979. And if you go forward from 1979, gold made a high in 1980. That from 19 years later in 1999, it was down still 62% over
Right.
nearly 2 decades. It came down 62%. And the high of 1980 was not crossed till 2007, 27 years. And it was not an anomaly. The next high, again, it fell 40%.
Okay.
The rupee chart of gold looks decent only because it is a rupee depreciation chart.
Oh, I see.
So,
Right.
हमारी नानी दादी गलत नहीं थी सोना खरीदने में, because at that time gold was the only hard currency asset you could buy. You could
Right.
not buy anything else internationally. You could not invest in international markets. But now that is not the case. Now
Right.
you should get your proper global exposure and outside the US also, not just the US.
Right.
And use precious metals, but should not be a huge part of your asset allocation. That's it. That's what I would say. And also, I mean, a thumb rule I repeat often, that the easiest way to see where the froth is in the market is to see where all the new fund offerings are clustering, because
Right.
they always come when that theme has gone beyond maturity and is close to the peak. This is again data over 25, 30 years. You see anything, whether it is IT fund, pharma fund, defense fund, small cap fund, they all cluster when the theme is peaking.
Right. Okay, so that is the story as far as historic data goes and the potential valuations go. But let's come back to Nilisha, the Kahani Kismat ki that you were talking about. Which are the sure shot Kismat ki kahaniyan brewing in 2026? Let's come down now to the brass tacks, to the sectoral focus. If you were to sort of give all our viewers and the retail investors out there some buying calls for 2026, which are the sectors that you would ask them to focus on?
So our focus from a capitalization will be select mid and large cap over small cap. We think earnings growth in mid cap is fairly good. And while valuations are little on the fair value plus side, select mid caps and large caps will deliver better return than overall small cap. From a sectoral point of view, we believe consumer discretionary space is attractive. Government is putting money in the pockets of consumers. There was tax cut of about 1 lakh crore in this year's budget. The GST at the bottom of pyramid on an annualized basis is about 1,92,000 crore. Of course, it does take away some money from top of pyramid. There is interest rate reduction, which is ensured about 1,80,000 crore savings on EMI burden of borrowers. Gaming has been banned. That could leave about 1 lakh crore in the pockets of speculators. And somewhere towards 2027, we will see 8th pay commission coming into play. First for about 1.2 crore government employees and pensioners and defense persons and PSU employees, and then eventually for state government employees. Put together, there is money in the pockets of taxpayers, consumers, EMI borrowers, speculators, and government employees. Wherever this money will be spent, those sectors will witness growth and hopefully margin expansion. So consumer discretionary space ranging from airline to travel to tourism to health to probably home improvement is the sector to look forward over next 2 to 3 years.
All right. So any place where consumers could go and spend money, I think that should be the barometer. That's the word coming in from Nilisha, that is where the likely growth will come. I was looking at the auto stocks, Mr. Shah, and those auto stocks, of course, which are also in the discretionary category, have returned tremendous investor dividends this year. In fact, Maruti Suzuki year to date is up about 50%. Mahindra & Mahindra is up about 20% or so. Devina, let me come to you with the same question. If investors looking for advice from you were to sort of take your word and bet on certain sectors for 2026, what would be your advice to them?
See, normally, I mean, we relook at our allocation every quarter from base zero. So I'm not sure what I'm telling you today will hold all through 2026.
Okay.
But I can tell you where we are overweight sectorally, and that is auto components. It is pharma and healthcare. And it is this year, 2025, where we have added through the year has been FMCG. So we talked about the consumption story a while back. There was a time last year when the inflation was so high, it was literally, I mean, when the dal and oil prices are high, it literally crowds out even toothpaste and shampoo from household budget. So that there has been a relief. So FMCG is definitely something. Banking, we're not overweight, but this year, through the year, we have added banking first in the PSU pack and later on and some others. I'm normally very underweight banking, but this has been the turnaround year for banking. IT might be the kind of dark horse. It has been a pretty bad performer for 2025 and in fact for some time before that also. So just as banking for the 5 years prior to 2025 was a huge underperformer every year, barring one exceptional year, which was 2022. So something like that has happened to IT, and that might be the thing that changes in 2026. So broadly, otherwise it is on the stock picking. So, I mean, we have things which are good in capital goods, things which are good in chemicals. We've added some oil marketing companies, though we're not overweight there, but that's broadly the pattern.
All right. Well, on that note, let me thank you both. Devina Mehra, Nilesh Shah, what a pleasure having you here with us on this market playbook for 2026. Well, if I can just quickly recap the advice which is coming from you. Consumer discretionary stocks should be in focus, and look at the mid-cap and the large-cap stocks. That is a word coming in from Nilesh Shah. Devina Mehra arguing that it could potentially also be an opportunity to dip into the FMCG space, and potentially the dark horse in 2026 could be the mostly undercut IT space, which could emerge as the dark horse. Well, on that note, Devina and Nilesh Shah, thank you so much for your time. It's been a pleasure having you here with us on News9 through the year. And I wish you both, and from all of us here at News9, a very happy and prosperous 2026. Thank you so much for your time.
Thank you.
And with that, we come to an end of this special edition of the Market Playbook for 2026. Thank you so much for watching. We'll keep getting you more insights all through the year right here on News9.
पढ़ता है, खेलता है, झूलता उछलता है, दौड़ता कभी कभी दौड़ कराता है, आगे आगे बढ़ता है इंडिया, अमूल दूध पीता है इंडिया.
A resurgent India is racing towards the Viksit Bharat goal, braving global economic headwinds. Bulletproofing our economy from these uncertainties are Bharat's homegrown businesses. Powered by tech-led innovation, Indian entrepreneurs are truly scaling up, riding the next wave of disruption with AI and cloud to break into the big global league. TV9 Network in association with SAP presents Visionaries of Viksit Bharat, a series celebrating inspirational business leaders shaping tomorrow. Watch them take an iconic leap at Visionaries of Viksit Bharat conclaves. Exclusively on News9.
This isn't a trail of peace. This is pressure overload. A hill built for 1,000, forced to carry lakhs.
Instead of lightening the footprint, you have allowed people to actually get into every nook and corner of the Himalayas.
Careless travel, choking hills. If we don't change now, there won't be much left to enjoy.
We need to follow the Bhutan model, regulate people who can access hills.
News9 presents Heal the Hills, continuous coverage.
Red Fort explosion. Let's get you all the updates. Following the blast, there is of course a South Indian connection of Dr. Shaheen Shahid. Because this is news of national import, that search operations are underway across the entire Al-Falah University campus. The blast killed 12 people. Prices, however, of Nandini ghee have been hiked. KMF has defended Nandini is the brand. I've been getting a lot of queries on my phone. What's for the people of Karnataka? Okay, you can play tennis as much as you want to, but I'm the empire and I will say please. There is an eyeball-to-eyeball confrontation. Where is this going? What is the way out? The farmers, they can actually shake a nation. Both of you down, because I can also shout Prashantji.
Believe it or not, it's like I said, it's been 2.5 years. I've spent zero, absolutely zero, when I mean zero, it is zero, money on marketing. I have not spent a dime on marketing.
Seriously,
we've
zero
got organic
money on marketing.
I'm being very serious. Yes, we did, when we will launch the product, which was 2.5 years ago, we did need to create a little bit of a buzz. So we had an event in Delhi. It was, just a, close-knit 200 ultra HNIs of Delhi who were invited.